Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue with or without funding. This is the 678th free mentoring roundtable. We've been doing this since 2008. And many 100,000 people have been participating in these sessions. We have a couple of pitches today, and we will have time to do Q&A. Remember, this is a safe working session, so you can bring your issues and we will do our best to give you constructive feedback. That's the whole point of these sessions. If you disagree with what you hear from me, that's up to you. It's your company. It's your venture, so you can do whatever you want with it. So we start with Geetha Panchapakesan in Mountain View, California. Geetha, please unmute your line and tell us what you're working on.
Absolutely. Thank you so much for this opportunity, Shramana. I'll walk through what it is that I'm building. Just a little precursor is that it is a very specialized thing. So if it is really confusing, please do let me know. But I have been in the payment space for the last 15 years, even a little bit more. And I was most recently with a company called Circle that was building in the crypto payment space. They basically issue what is called a stablecoin, and a stablecoin is a crypto token that doesn't change in value. It's basically pegged to a fiat currency. In this case, it's pegged to the dollar. And so people use it as a way to trade in and out of other currencies quickly. So if you're buying Bitcoin or selling Bitcoin, it's easier to buy and sell against a dollar token rather than an actual dollar where you have millions of dollars that you have to request your bank to send you, and then you use that to buy the Bitcoin, then you sell the Bitcoin, you have to send it back to the bank, and all that takes time. Instead, people buy this token, which represents the dollar, and they actually use it to do that. But there has long been a belief that tokenizing money makes it easier to move money, especially when it comes to moving across borders. Within borders, countries are doing different things to make money move easier. Instantly, but moving across borders, even though it may look easier for, say, a consumer, it's actually not that easy on the back end. There's a lot that's going on that the consumer is not aware of. And I say that specifically because if you're moving money from, say, the US to India, many Indians say, I move it from ICICI account from like A to B, and it goes instantly. It's actually not that simple on the back end. There are people taking risks. There's time that it takes to move money. And so stablecoins have been viewed as a way in which money can move quickly cross-border. And that is fundamentally what, Circle, for example, has built their company on over the last 10 years, and many other companies are being built on this. There's a lot of interest in the space. There's a company called Bridge that was bought by Stripe, who is a very large payment provider, for like $1 billion. And that has really like catalyzed the space because someone like Stripe legitimizes this space. And there's also a lot of like regulatory changes that are happening with the new administration in the US, and all over the world. There's active regulation to make money movement over the internet is a simple way to put it, a lot simpler and easier, like to make it possible for large institutions to get into this space. So that is like a little preamble for you guys to understand what it is that I'm building, because like
One question, Geetha.
Yeah.
Were you in Circle as an engineer, as a product manager? What capacity did you work at Circle in?
Neither. So as long as I have been in payments, I've been in product. But in Circle, I actually joined the business development team. So I have actually been talking to people on the ground to try and get them to understand the value of what it is that we're building, to see if they will adopt it. So that is my perspective, is that I've been able to develop relationships at Circle quite a bit with the ecosystem.
Great.
So, at a very high level, the overall cross-border payments, like I said, stablecoins, the belief is that's what it will solve, is like 44 trillion in global cross-border volume. It's even more than that, but specifically what we can address is the 44 trillion.
And right now, like I said, because of the regulatory environment and because, of market activity, like what Stripe and Bridge are doing, there is like, this is the time, like it is a very good time to actually build this. And I know this because people used to come to Circle and say, hey, help us build this. But Circle's focus was a little bit different. To be honest, Circle never knew what they were going to focus on. So apart from actually having issued the coin, the infrastructure required to build and grow it was not something that we were offering to other people. So I know there's a big gap there. Um, there are companies, smaller companies, crypto native companies that are actually building in the space and trying to offer cross-border payments. But my hypothesis going into this is that if you don't offer large financial institutions that are moving money today the ability to do this, this is never going to become big. Because the 44 trillion that's being moved is being moved by payment providers and banks. That's who moves the money. These guys are licensed, regulated, and they have businesses set up to move money on behalf of their customers.
Yeah.
And these smaller startups that are doing this are also trying to get into the space. They have their own licenses. They're doing different things. But my hypothesis is that building a stack that is specific to these licensed financial institutions for them to plug and play and go using their own licenses, using their own regulatory framework and their own operations is the way to actually make this thing big. So that's how I'm getting it.
But what is going to be the token? Is it going to be their proprietary token? Is it a full stack white label solution, or are you pegging against one particular token that you will be controlling? What is the
No, so the token doesn't matter is where I'll start. There are currently there are two primary US dollar backed tokens, and this is starting with US dollar backed tokens because that's like 60% of cross-border money movement is actually in US dollars, especially when you look at business money movement. So I'm starting with US dollar backed tokens. There is 200 plus billion of US dollar backed token that's actually being moved today. And two of the biggest tokens are one called Tether or USDT and one that Circle issues, which is called USDC. The reason why it's important to have a token that's actually being circulated today is because let's say I send a dollar token from here to somebody in India, right? They have to take that dollar token, and when they want to, they can hold on to the dollar token for as long as they want, but they have to be able to spend it. There's not a lot of places you can spend the dollar token today, so you have to be able to convert it to Indian rupees. The thing is, if you don't have the ability to convert it to Indian rupees, there's no point of you getting that token. It becomes a lot harder. But what happens is these large tokens that are circulating, that's like 200 billion plus, you can get the money on the other end and actually convert it because there are a number of ways you can actually convert it. And part of my stack will also connect to some of those third parties in region.
I see. So the dollar token that you want to operate in are one of those or both of those tokens. You kind of give the choice to the banks to which token you want to convert. Okay, got it. All right.
There are also other tokens, by the way. PayPal issues a token. It's called PYUSD. Ripple issues a token. They're just much smaller. It's just not that easy to get Indian rupees on the other end with the PayPal token, but it's very easy to get Indian rupees with the USDC token. So my thing is I'll be token agnostic. It'll be a fiat backed token. I could do this in India and I could do it with an Indian rupee backed token. Whatever the use cases are where the demand is, I will go because it is a tech stack. It is a white label tech stack that a bank or a payment provider can use.
Okay.
And I think the reason why something like this is actually needed is because all these financial institutions, large ones, they kind of vaguely know about stablecoins. Some of them, a very few number of them, are kind of ahead of the game, but a lot of them are really starting now. They started paying attention now. They were afraid to touch it because they weren't sure what the regulatory environment was. And on-chain, which is blockchain-based payments, are quite different, technically more complex. The way you do all of the regulatory compliance things are also different. Like there are different providers to check whether there is like whether the wallet that you send to is like a terrorist wallet. Like all the things that regulations require you to do are all done differently on chain. So I come in with sorry, you can
very interesting.
Sorry, go on.
No, I said this is very interesting. I think you have identified an opportunity. I don't know the competitive landscape of what you're going into. I assume you're researching that.
Yeah, and actually it's there in my deck. I mean, the deck is pretty comprehensive. So if you want to shift to the next slide, we'll skip the table of contents. So basically this, as I mentioned, is that cross-border payments are 44 trillion. It's actually 190 trillion. But there's a whole bunch of flows like that. Big banks basically move money at large scale. They make markets, they're doing FX, they're doing capital markets. That we're not getting involved in right now. All the other flows that are what, this particular study that I use, they call them retail flows, are the ones that are actually the target for like stablecoin money movement. So there are cross-border payouts use cases, which, like I said, is basically sending money from point A to point B. I'm paying an invoice. So I'm sending, my vendor money, or I have a treasury in the US and in Singapore, and I need to make sure that that moves instantly and quickly. Today, it takes me 3 days to move it. I have payroll or gig economy workers that are sitting in different parts of the world that I want to pay out, and they're willing to take stablecoin because it's a lot easier for them and they get the money right away. So there are different use cases that I'm going to focus on. End user remittances is one of them, but that's kind of later, and I'll walk into why.
But you have to pick which use cases you want to enter the market with.
Yes. So if you can flip to maybe, and I go into all of that in this deck, right? So this is, like it's because I've been in this space for so long. This is pretty much like, I know the space really well. And so, part of it is a lot of these financial institutions don't necessarily know a lot about stablecoin payments. So this is a very simple way to show it, which is that one, they are simply faster and cheaper. Today, if you want to move money from like Mexico to Vietnam, and I do have a slide in the appendix which talks about the fact that there's a lot of global commerce that's actually shifting from like south to south, as they say, which is more emerging market to emerging market. Like if you want to send money US to Europe, large banks handle that. It's very easy, it's simple, it's quick, and very tight FX spreads. But if you want to send money from Mexico to Vietnam, it takes you 3 to 7 days and it costs a ridiculous amount of money. If you do it in stablecoin, it's a lot cheaper. Today, stablecoin volume, people are like, oh, it's still very small. Actually, it's not, right? Like total stablecoin volume is like 33 trillion. Visa does this thing where they actually go in and try to like extrapolate the data and try and figure out how much of this is actually like people moving money amongst each other. And that's about 6 trillion. And that compared to what Visa does in a year, it's almost half of what Visa does in a year. So it's actually pretty crazy. And this I mentioned already, FIs are not in a place where they can compete because blockchain payments are different. And any existing solutions are, basically taking the regulatory liability away from the FI and putting it on these third parties. And the FIs are like, why am I paying more to do that when I have my own regulatory environment? I know how to handle it. I've been doing this for fiat payments. And I also, have an operational environment where I would like to control everything and not hand it off to somebody else. So maybe we can shift to the next slide. I'm trying to go faster now. So this is the platform. These are the things it does. I don't think we need to go into this level of detail here, but it does go into like onboarding. It does the payments and the payouts, managing the detail, etc. So here is where the use cases are. So I have P0 use cases and a P1 use case, and I'm going to start with business focused use cases. The reason why 4 of these are clubbed together is because today all financial institutions pretty much do all of these, right? So if I go to a financial institution, they're offering all of these use cases to their clients. But if I want to talk to somebody who does P2P remittances, like, user to user remittances, I'm sending money to my mother in India, that's a different set of FIs. It's still similar in the back end, but I'm not going to go to that right now. My P0, my first level, is those financial institutions that are dealing with, B2B or B2C payments. Business to business or consumer payments. Sorry, if you can go back one more minute. Shramana, to the previous slide. The one other thing I want to point out also is that I'm also very focused on certain geos. I'm not going to every geo. I'm a tech platform. I can go anywhere. But I'm going to focus on geos where I know there is stablecoin regulation today, or there is going to be soon, or they're actually very stablecoin forward. Those are the ones that I'm going to start with. So then next slide. This is basically the value prop, which is that one, for an FI today that's doing primarily fiat, stablecoin is a lot better. It gives them the ability to, unlock new segments, allows them to, enable higher margin flows because it's a lot cheaper for them to actually move the money, or they can basically keep the margin but offer new products at like higher speed, etc. However they want to do it. My platform will allow them to get to market quickly, manage their launch and scaling costs, and they retain full compliance and operational control of the movement of money. And I'm unique in the space because one, I have laser focus on FIs. There are others that are doing this. And if you go to the next slide, you'll see my competition. There are others that are doing this, but they're not laser focused on FIs. They're all trying to quote unquote disrupt the market, right? You cannot disrupt this market. There are existing entrenched players who move tons of money, and it's not going to be very easy to move away from them. It is a lower cost service because the FIs are going to use their own regulatory and risk capabilities. They're not going to be paying somebody else to take the risk. And my experience is very deep, and my ecosystem and relationships are very, very deep. So I've got relationships in all in FIs and PSPs. I have worked with these people for the last 15 years. I have senior level relationships. I have a place to start very, very quickly.
And who are the founders besides you?
At this point, it's only me. I had a CTO that we were working with for about a month and then didn't quite work out. So I am in the process of trying to both raise money and find a CTO or a head of engineering at the same
Okay.
time. So this is basically the competitive landscape. You have, crypto as a service providers. These are the guys that are getting all the news that this is what people are talking about. There are virtual asset service providers like Coinbase, so basically exchanges who do this as a side business. It's not what they primarily do, and they're not really focused on FIs. There are large payment service providers who are trying to get into the stablecoin space, but they compete with the other FIs, so it's not really the right place for the FIs to go to. There are networks that are doing parts of this, but for me, I'll plug into those networks to move money. They're not really focused on the FIs.
So let me just synthesize what I heard. This is the most important slide in some ways. I understand what you're trying to do. You want to provide the financial institutions the capability of moving stablecoin, cross-border stablecoin. And the rest of almost none of the players are doing that, is what you're saying.
They're not focused on FIs. They could sell to FIs. The CAS providers, PSPs, BBNK, and Bridge can sell to FIs. But their product requires, if you go to the next slide, you'll see that because of the fact that you're depending on those guys' licenses and risk taking, they charge 25 to 40 bips for moving the money. Mine, because the FI is using their own risk and I'm literally just the tech stack, I will charge 2 to 5 bips. It is a more expensive proposition. It also takes the control out of the FI. So mine is pretty much unique at this point.
So you are not charging a subscription fee, you want to charge a transaction fee.
I did a lot of the numbers. Charging a subscription fee is almost pointless because the money is in the movement of the funds. Pretty much all money movement, people tend to charge for the movement of money, the actual volume of money, rather than subscriptions or transactions. So it is a paradigm. It's a business model that the space knows really well. The ecosystem
Have you
knows.
discussed that with the potential customers whom you're
I've been talking to. I should actually add that to this deck. I've talked about 25 customers so far, and pretty much everybody is very comfortable with that paradigm of how it is actually, how I'll actually charge for it. Because the other option for them is to go build their own, and they're not quite ready to build their own yet. Like very, very few of them are. It's too early for them, so they're happy to plug in. But again, I mean, to be quite honest, I've been doing this for a while, so I know that people will say, "Oh, this is brilliant," and I want it, but when I actually go get them to sign the paper, it might take a little longer. But yeah, there has been a lot of interest. We can skip this slide, and that's it. Basically, this is the if we go to the next slide, you'll see. So I did. So after this, literally, we decided to part ways after I sent you the deck. So this happened 2 days ago. I think I sent Maureen the deck yesterday, and yesterday we finally decided it wasn't going to happen. So yeah. So it happened well before I got
the stage. So you're saying that you're trying to raise money and hire a CTO. Raising money without a CTO for a business like this, which is so technology heavy, is really hard. You realize that, right?
I don't disagree with you. Again, I've been talking to people. I've talked to a number of investors. I've talked to a number of fellow entrepreneurs in the space who are doing different things, and everyone's had different experiences. I do have like 2 friends who've raised pretty reasonable amounts of money without a CTO. But the truth of the matter is, one, I'm open, right? Like I'm going to talk to investors. I have like a few investor meetings set up for next week. And I'm going to be like, hey, this is kind of where I am. I have a couple of people who are not in a position to leave their existing jobs and come today, but if I am able to raise money, will be willing to quit. So I don't know. I have to tell the story appropriately and see whether people are willing to say, okay, I'm willing to invest in you. And I feel like I come with a solid story. So it's definitely, it's not like, oh, I have an idea and I don't know the
Are these
space.
investors who know you?
Yeah, I mean, yeah, these are investors who know people who know me.
So, in my experience, this stage of financing is very, very hard.
Yeah, I agree. I know. I'm very, very aware.
So, if you go talk to a lot of investors and they turn you down, you're going to waste a tremendous amount of time.
I'm only doing it for a couple of weeks. In parallel, I'm also talking to a number of potential clients that I'm like, if I can get an MOU from somebody that says, hey, I do want you to build this. I have engineering resources, but they're not yet part of the team. And everybody's like waiting to see if we can raise some money. So I'm open. I'm gonna see how this goes. But I do understand that it's not going to be easy without a CTO.
And what brings you here?
I'm in my early stages of doing a pitch. The more I can pitch, the more I can talk about it, the more I can have people ask me questions. It will be incredibly helpful. So I wanted to try and pitch and see what.
The pitch needs a lot of work. It's a good pitch in the sense that it does show off your domain knowledge, which I like very much. You do have domain knowledge and you are able to convey that you have domain knowledge, you have a good grasp of the industry. I think you need to clean up the pitch and get to the business much quicker. There's too much text on each slide.
That's fair. And I absolutely take that feedback. It's something that I struggled with a lot as I was going through the slides. The one thing I will tell you is that most of the investors I'm talking to are very deep in this space. So they get the space, they understand what it is that I'm trying to do.
Even I understand what you're trying to do. That's not the point.
No, it's not that. They're very aware of stablecoin payments. They want to invest in stablecoin payments, and they want to talk to somebody who knows the space very well, which is why I got my leg in the door with a lot of these people.
Yeah.
But from a pitch,
I accept that, but somebody will have to build the product. It's also a complex product to build.
totally agree.
So nobody can invest in you just without a strategy of how this product gets built. That's where the rub is.
So tell me what that gap is. So from my perspective, it's like, all right, I am a product person. I know what needs to be built, right? I know exactly what the what the functionality is that needs to go out there. I need an engineer to build it. I need somebody who potentially is blockchain savvy to build it. Now, that is, if I raise money to pay somebody to do that, is not a difficult thing to do. So I'm not exactly sure why selling that story is going to be difficult.
The industry doesn't operate like that. That is the problem.
Well, sorry, can you say more?
The industry is full of bootstrap founders who get to customer validation and then come and raise money. So
I've got 3 friends in the last 6 months who have actually raised money on a deck. So that's
so I'm coming
confidence
to
I'm
that.
getting.
I'm coming to that. The exception is in domain knowledge. 1 is domain knowledge, 2 is repeat founders, and 3 is if somebody knows you really well. These are the 3 criteria in which you may be able to raise fund on a deck. So go check in your network to see which of these apply.
So basically the ones that I'm talking about who raised on a deck are exactly like me. People with very deep domain knowledge, not previous founders, but people who have like senior leadership roles in other companies similar to me, and who have again have raised money based more on their ecosystem, their relationships, because building is almost like the easier thing to do. You find the right people, you build a good product. The truth of the matter is selling this thing is the harder thing to do. So getting to market, getting to the right people, that is what you need. I think is makes me more unique than somebody who has a product that they've built or they have an engineer.
So what did I say? I said domain knowledge, Domain knowledge includes domain relationships. Somebody knows you or repeat founder. You're not a repeat founder. It sounds like you're not talking to investors who know you per se.
Yeah, but they know the space and they know people who know me for the most part. Yeah.
Doesn't matter. I'm just going with 3 criteria. 1 is people know you. 2 is you're a repeat founder. 3 is you have domain knowledge and domain ecosystem relationships.
Right.
So that's the one that you're trying to raise money on top of.
Yeah. Yeah.
Domain ecosystem relationships. And you're saying there are 20 customers that you've talked to who have validated your story and are willing to buy your product if you build it.
Yeah.
So there, that's why I'm not saying that it is impossible to raise money for that combination. That is a combination where it may be possible to raise money. It's not a given. It's not easy.
Yeah, I know. I'll know next week as I'm having some serious conversations next week. I'll know whether or not there's whether my thesis is right. The thing is, I kind of warmed the embers a little bit by talking to a bunch of these investors before and saying, hey, this is what I'm doing. It's kind of coming soon. And I got very positive responses, but I know that doesn't mean anything. When it actually comes to giving me money, whether or not they will give me money is
well, the reason I told you what I told you about what other founders are doing is that any given investor is going to have options. They have a finite number of deals that they do in 1 year, and they will have options. You are one of them, and they will have in their deal flow, they will have, let's say they get 400 deals a year, and they will shortlist maybe 10 or 20 of those deals, and they will invest in 4 or 5.
Got it.
So you have competition. It's not like you're the only.
Understood. Yeah, for sure.
So
yeah, which is why I was saying it's all very nice to say come and talk to me, but if
you're competing with teams that have more of those pieces, more de-risking basically.
Yeah.
That they have, a MVP already, customers in the loop, and so on and so forth. Then you're going to lose because that's, even if they want to invest in you, they will have a de-risked option, which is going to be more attractive for most investors.
Understood.
So my guidance to you would be, is there a way that you can de-risk yourself? It sounds like you have a long work experience. You have worked with a lot of people. You have the industry well figured out. How can there not be somebody whom you've worked with over your career who wants to also do a venture, who wants to pair up with you, and can you not build an MVP?
Yeah, no, it's actually fair, and that is my kind of like next step, right? I have these conversations set up next week, but depending on how much I get in terms of like what kind of feedback I get, my parallel process is 2 things. One, like you said, actively kind of trying to get somebody over. I have 3 potential candidates that I'm kind of talking to who might be interested, who are interested, that I'm trying to get over, or at least to help me start building on the side. And 2 is to get 1 or 2 clients to actually sign like a letter of intent or something to that effect, right? To say that this is actually. So I'm doing that in parallel. It's not like I'm like, all right, I'm just going to wait to see if an investor gives me money, but I'm kind of doing that in
That's my point, is that don't wait for an investor to give you money as the only way to move forward. Entrepreneurs looking to raise funding to build an MVP is not looked upon well in the industry.
Got it.
I don't care whether your friends have raised money or not. It's not looked upon well. At large, this industry does not look well upon entrepreneurs who are looking to raise money to build an MVP.
Got it. Okay. Sounds good. Very, very helpful. Thank you.
Welcome. Okay, Michael O'Malley is next. Michael, please go ahead.
So good morning.
Questions, I will take them after I'm done with Michael's presentation. Okay, I'll have more time to take questions. Go ahead, please.
Okay, so after going through like half of your Udemy course, I realized that when you say tech, you're talking software, and when I say tech, I'm talking hardware.
Okay.
So I'll give you some background. For 32
So
years,
it's not entirely true. It's partially true. It's not entirely true. We do information technology in the hardware space. That's something we know. But if you're talking about machines and, like packaging machinery and stuff like that, we don't do that. Or we don't do biosciences either. That's also tech, but we don't do biosciences necessarily.
Okay, so my background is for 32 years, I was a commercial fisherman out of New Bedford, Massachusetts here. And I had to smile at your YouTube video, The World is Your Oyster, when you said Massachusetts and you shuddered and said Pole. I have to laugh at that. But for 32 years, I was a scalper out in New Bedford. I ended up getting severely hurt on the boat. I have 2 artificial discs in my neck. I tore my rotator cuff. And I was like, now what? Now what am I going to do? So it always bothered me that the amount of power that's in the Cape Cod Canal, the water that flows through there's enormous power. And between Nantucket and Georges Bank, there's enormous power in the water. And I always had it in my head on how to build a water turbine. So when I was laid up, I spent there you go. When I was laid up, I spent thousands of hours researching my water turbine. And I came up with, nobody had it. Nobody had my water turbine. But what happened with all the thousands of hours is I learned from other people on how to make it better. So originally it was 1 vane on the top and 1 vane on the bottom aligned. And after reading about Dr. Alexander M. Gorlov at Northeastern University and torque ripple effect on machinery, I ended up changing it. Next slide. So I started looking at companies that are actually making money doing this. This is Emergy. This is out west where there's 8,000 miles of canals to move fresh water. And she was working for a company that was looking into making power. And because they didn't make a lot of power, he said that he wasn't interested in it. And Emily Morris picked it up and she started the company. It's now an $18 million company producing small amounts of power for moving water. So I knew I was on the right track. Now hers is a triple and New Energies is 4-bladed foils. This is Dr. Alexander M. Gorlov. In the middle of the slide is the Darius turbine. It was invented in the 1930s. And what happened was 1 foil is always going into the tide and the other 2 are always working with the tide. So there's a fight constantly going on. And that fight ended up causing structure and bearings to be demolished. So looking at that, this is what he has, and this is Ocean Research Power Company tested it in the Cape Cod Canal first with the Northeastern students. And now he has it in Maine. He has it replacing diesels.
So, Michael, what are you trying to do? What is the business that you're trying to build?
So I'm trying to get to the point where I can actually have people sit there and look at this and invest in it. So
this is totally they're totally outside of our scope. I don't have any investor in my network who would touch this.
Okay.
So
I'm glad that I came because I got to see her presentation. And that was the learning process that I have to have.
It's more in my sweet spot. I have investors who would touch her presentation for sure. Because she's working in the mainstream of information technology driven solution. We call it FinTech. Her presentation is a FinTech presentation, and that's within our scope, but this is outside of my scope.
Shamana, thank you very much. I appreciate your time.
You're welcome. All right, folks, very quickly, how to use 1 million by 1 million. Everything is at 1Mby1M.com. If you want regular mentoring, consulting, coaching, whatever you call it, on your strategy, pitch, etc., you need to be in 1M1M Premium. Investor introductions, we work with many investors, including a lot of pre-seed investors, and that's all part of the investor introduction within the premium program. We also have a curriculum. So, especially in the pre-seed, seed, first-time entrepreneurs have a long and, steep learning curve. And we have tried to put together a very efficient way to learn from other entrepreneurs. We do a case study based curriculum, and you can learn through that all the nuances of what you need to do to put one foot before the other. That curriculum is accessible through the premium program as well. And then there's influencer marketing. Because of my stature as a major LinkedIn influencer, I can also help you get the word out with what you're doing. Now, if you just want to do the curriculum, you could start with 1M1M Basic. In particular, we have a lot of entrepreneurs right now who are starting as bootstrapping with the paycheck scenarios. So you still have your job and you're starting, you're learning how to put one foot before the other, starting your ideation process, methodology learning process, and 1M1M Basic is perfect for that category of entrepreneurs. So go to the website, look at what to expect from Premium Basic. Some of you are looking for one-on-one consulting. There is an obsession on stealth and secrecy. Well, if you feel that way, that's fine. You can get one-on-one consulting. It is more expensive. Next month, we have all four Thursdays, we will have roundtables. I have to do a short roundtable on April 3rd. So we have a guest, an investor is on the show on the 3rd, but we won't have time to do pitches, but 10th, 17th, and 24th, we'll have full-fledged roundtable. So you will be able to do pitches there as well. Just register and Maureen will schedule you for one of those. If you have questions about the program after this session, Irina Patterson is your contact, irina@1mby1m.com. She'll be happy to talk to you on the phone or by WhatsApp and so on. Okay, anybody else? Questions? Geetha, do you have any other questions before we adjourn?
No, I think I will let me, like I said, go through the next couple of weeks. I have a few things that I'm trying to figure out. And then, if I think if it makes sense for me to kind of come back to you, help with more kind of investors or figure out the MVP process and things like that, I will reach back out. But let me just go through the next couple of weeks that I'm trying to figure out
there are a couple of things I will tell you, just pointers wise. If you end up being a solo entrepreneurs are doing great right now. There's a lot of solo entrepreneurs who are succeeding. There are certain, best practices in solo entrepreneurs. So solo entrepreneurs tend to do their MVP in an outsourced mode.
Right.
Which I believe you should be able to do. You're a product person, you should be able to scope out the product and manage an outsourced development process and get an MVP done that way. And especially if you have customers who are willing to engage on an MVP that is built outsourced and are starting to pay for it, that's a path to getting off the ground. And then the rest of the resources, whether it's financing and other team members, etc., can come together. And my favorite example of a very successful solo entrepreneur that I always, think about as like a beacon is Fred Luddy, who founded ServiceNow as a solo entrepreneur.
My husband works for ServiceNow.
So don't think badly of solo entrepreneurship as a path. It is a path, and it is a path that has, that has been very successful for a lot of people. And the other thing, in 1Mby1M, we support bootstrapped entrepreneurs. Bootstrap first, raise money later has worked for our community very well. Okay. And we have done that for years and years and years. We've started 1Mby1M, we started in 2010. And, even before that, long before that, actually, at least 5 years before that, I started the Entrepreneur Journeys series where we started doing these case studies. And we have a ton of solo entrepreneur case studies. What Michael was talking about of my Udemy courses, there is a solo entrepreneur course on Udemy that has tons of case studies and talks about some of these, best practices of how to be successful as a solo entrepreneur. Okay. So that's just FYI.
Okay. No, excellent.
Get discouraged. Investors not investing is not something you can afford to be discouraged by.
Yeah. No, understood. And being as I am an old lady, I have seen these cycles many times. So I'm expecting to be disappointed, but I want to try everything and see what actually works, what actually sticks. So
All right.
awesome. Thank you so much.
You're very welcome.
Thank you.
Thank you for coming today, folks. I will see you next time. And good luck meantime. Make lots of progress. And, I always remind myself also, because I'm also doing something entrepreneurial. 1M is a very long journey. It's a marathon, not a sprint. We've been doing it since 2010. So every day, if I make some progress, I'm good. Because if over 365 days I make progress, I will make progress.
Yeah.
And that's, I think, a good philosophical, principle to keep in mind. Talk to you soon. Bye.
Awesome. Thank you so much.
Bye-bye.
Bye.